Welcome to short sale versus foreclosure. What is better for the bank? Melissa, what do you think? What would you think if you didn't know anything would be better for the bank? A short sale versus foreclosure?
Well, I'm going to have to go back several years because I know too much now. But if I had you had to ask me this 3.5 years ago, I would assume that the short sale would be better.
And that's because the foreclosure process is extremely expensive for the bank. $40,000, $50,000 easily.
And they're not making payments, and it takes some time to get it done, right? You got to give notice and court appearances. 4 to 8 months, they say. Yeah, they say that. I've seen it done faster, but you're right. There's not receiving any payments. That's what I would think.
Okay. But, so that's what you would think. But Melissa's going to share with us today a story about one of our friends who is actually a real estate professional, been in the business for quite some time, and was trying to modify her family's mortgage, and had quite a story.
Yeah, well, and it actually was enlightening to me because I was fortunate enough to be able to help her get this her short sale approved just simply by being involved in helping her get with the right people. But basically, she applied for a loan modification, provided all the documentation that the mortgage company had asked for, and felt like things were going really well. I believe it was during one of the points where she started to cry, and the mortgage agent on the other phone said, "Hey, listen, this investor has never approved any modifications," which was very shocking. So at this point, they start the foreclosure process, and we referred her to our favorite attorney. The attorney was able to, through her online search, and I believe it's an online system that the attorneys can get into, that I'm not privy to where that exactly was, but she was able to find out that there were 2 mortgage insurance policies against this particular home.
So what's a mortgage insurance policy?
Well, and I think we heard about this in Congress. Congress investigated, but they didn't quite say what the no-lose opportunity for the mortgage and Goldman Sachs. I don't know if anyone remembers the Goldman Sachs before Congress, but this is what they're talking about. So essentially, whenever you got a mortgage and you didn't put 20% down, so for the last 10 years we were doing 3% down, 0% down, 10% down, mortgage insurance is in the loan, attached to the loan, or quietly not spoken of, but is somehow paid by the initial lender. So mortgage insurance is the protection to the person who's ultimately funding the loan. In case of default, this money would get paid to the original lender.
Okay.
What I didn't know, which I found interesting, is just as you could take multiple life insurances against your husband,
right,
or he could take multiple policies against you, you could do the same thing with mortgage insurance. I had no idea.
So how many insurance policies were against your friend's home?
There were 2, actually. So we did the quick math. So the mortgage insurance is paid out at the initial loan amount.
Which in this case was over $800,000?
It was over $1 million.
Okay.
So over $1 million was going to come not once, but twice. And then when they sold the home,
after they'd foreclosed on it.
Correct. They would have gotten paid a 3rd time. So depending on how that worked out, I mean, this was a cash cow for them. And of course, we know that Congress bailed out the mortgage insurance companies, and so of course this money was being paid out. So ultimately, it does not behoove the lender to allow a short sale to be approved.
Because in those cases, the mortgage insurance policy wouldn't be paid out.
And I'm not sure if it's not paid out at all, but there's definitely a restrictive amount of what it's paid out. And we probably need to bring Dina in for an interview on that. That would be another good video follow-up to this. But that gives you some ideas on why banks don't like to do the short sales. But maybe now, at least for the next couple of months, until they get their act together, are going to be forced to do it. If you watched our earlier video, you understand why banks stop foreclosures. But lesson here is it's not always as it appears, and it doesn't have to make sense. We just have to figure out how to make it work for you. And we've become fairly fluid in the information. We monitor it. We talk to people. I think
I stalk CNN, MSNBC, and every other source possible so that we are up to date on it for us and our clients.
And I'm constantly taking our attorney to lunch so I can pick her brain, and we always have clients we're referring her to. So if you ever have any questions, you want more information, feel free to contact us. We're here to help. And we'll see you next time. Thanks again for joining us.